Hello, my name is Amy Gerard, and I'm a labor and employment attorney here in Naples, and I've been asked to provide a brief overview for NABOR members of certain benefits that have been made available as a result of the federal government's COVID-19 relief package. This package is currently comprised of two primary pieces of legislation, which are the Coronavirus Aid, Relief, and Economic Security Act, which is more commonly referred to as the CARES Act or the Stimulus Plan, and the Families First Coronavirus Response Act, which is known as the FFCRA. Both of these statutes contain a multitude of provisions, not all of which I'm going to address in this brief presentation. Instead, I've called out some of the provisions that I thought might be of particular interest to NABOR members. Given that many of you are self-employed, I wanted to begin by outlining unique benefits that the Act provides for independent contractors and others that are self-employed. One of the most important changes in the CARES Act is its creation of the new concept of pandemic employment assistance. Through this section of the Act, independent contractors and self-employed workers with their own LLCs or S corporations are now temporarily eligible to seek unemployment compensation benefits if their earnings have been significantly reduced as a result of COVID-19. Self-employed individuals have not previously been eligible for unemployment benefits. As this is a new program and details have not yet been published regarding the exact criteria for eligibility, anyone who believes they may be qualified for unemployment compensation benefits is encouraged to apply and wait for a determination. It is clear, however, that if you are currently receiving paid leave or if you are able to telework, you will not be eligible. The Pandemic Unemployment Assistance Program provides up to a maximum of 39 weeks of benefits. The CARES Act also provides a supplement to the amount of benefit that employees would be entitled to under the Florida unemployment system. Florida's unemployment benefit generally varies between $32 per week up to a maximum of $275 per week. The CARES Act will add an additional $600 per week to each employee's benefit through July 31st, 2020. Also, if you file a claim in Florida between March 15th and May 2nd, 2020, you will not need to register with Employ Florida, and you will not need to provide the information that is typically necessary to establish you are actively seeking work. These requirements have been temporarily suspended due to COVID-19, and you will not need to complete those sections of your unemployment application. You will, however, need to establish and log into your online account every 2 weeks and complete a request in order to continue receipt of your benefits. You may submit a Florida Unemployment Compensation Benefits application online at connect.myflorida.com. As you can imagine, with the unprecedented number of claims that are currently being filed, the Florida Unemployment Compensation website has been crashing and has oftentimes been unavailable for hours. For this reason, you may now download a copy of the unemployment application you may print and mail in at floridajobs.org/COVID/19. You may also find a copy of the unemployment compensation application at FedEx locations throughout Florida. Previously, you weren't able to apply for unemployment assistance using your mobile device, but on April 8th, Florida Reemployment Assistance launched a new mobile-friendly website, and there's a pathway that will direct you to that website contained in the slide. You may also call Florida Reemployment Assistance at 1-800-204-2418 with any questions. Remember, if you're unsure if you would be eligible, you may simply file a claim and permit Florida Reemployment Assistance to make that determination for you. You will not be penalized for filing a claim. Benefits determinations are generally made quickly, and your eligibility and benefit amount will typically be communicated to you using the online Connect account that you will establish when you apply. Generally, unemployment compensation applicants have to wait a full week before receiving benefits. The CARES Act eliminates this waiting week, and you should be immediately eligible for unemployment benefits. Due to the number of claims for unemployment to process, however, you may still have to wait a bit to have your eligibility and benefits amount determined. To make sure that you do not lose your benefits during this time, the benefits that you receive if you are eligible will be retroactive to the date that you applied. If you apply online, you'll receive your benefits via a state-issued debit card unless you provide reemployment assistance with your direct deposit information. Another CARES Act benefit that can provide you with immediate cash to pay household expenses during this time is the ability to now withdraw from your 401k or IRA account without paying the 10% penalty for early withdrawal. If you are under 59 and a half years old and you have money deposited in a qualified retirement plan, you may now withdraw up to a total of $100,000 without incurring the 10% penalty. That applies if you have been diagnosed with COVID-19, or if you have been caring for a spouse or dependent with COVID-19, or in the event that you experience adverse financial consequences as a result of being quarantined, furloughed, laid off, or having your work hours reduced as a result of COVID-19. Although you will still have to pay income tax upon any amount that you withdraw from a qualified retirement plan, you are permitted to spread the amount withdrawn over a 3-year period beginning in 2020. You also have the option to repay the amount you withdraw within 3 years of receiving it and avoid paying tax upon the income altogether. The CARES Act also permits qualified retirement plans that have not permitted participants to take loans in the past to immediately adopt policies that permit participants to do so. So it may be a good idea, if you haven't checked to see if your 401k or IRA permits loans, to check again after the passage of the CARES Act and see if your plan has updated its policy in this regard. If you are required to take a minimum distribution from a qualified retirement plan already, or if you are a beneficiary of a qualified retirement plan who is required to take a qualified minimum distribution, that requirement has been suspended for the year 2020. The other statute that I'd like to discuss is the Families First Coronavirus Response Act. The FFCRA provides employees with up to 80 hours of paid leave if the employee is subject to a federal, state, or local quarantine or isolation order due to COVID-19. The guidance on the act is still developing, but last week the Department of Labor issued a statement clarifying that Governor DeSantis' Safer at Home order would qualify as an order giving rise to paid leave under the act for all non-essential workers who are required to remain at home. Employees would also qualify for this leave in the event that they are advised by a healthcare provider to self-quarantine, or if they are experiencing symptoms of COVID-19 and are seeking a medical diagnosis. Employees may also be eligible if they are a caregiver for a spouse or dependent who is quarantined or experiencing symptoms of COVID-19. And finally, employees may be eligible if they have a child whose school or daycare is closed due to COVID-19 and they are without any alternative child care options. FFCRA leave is generally not available to employees who simply want to self-quarantine to avoid the spread of the virus, unless they are non-essential employees under Governor DeSantis' order. Even though an employee is able to get up to 80 hours of paid leave under the FFCRA, there are caps on the amount that an employee may receive each day, as well as in the aggregate. For someone who is subject to a governmental order or is quarantined or off work at the request of a healthcare provider, the leave payment may not exceed $511 per day or $5,110 in the aggregate. If the leave is to care for someone who is ill or quarantined, or if the leave is due to child care needs, the leave payment may not exceed $200 per day or $2,000 in the aggregate. Employers are also required to post a notice that is available to download from the Department of Labor website, which is dol.gov, which provides employees with additional information regarding their leave rights. The FFCRA took effect on April 1st, 2020, so employees who request leave from that date forward may be eligible. The FFCRA also extends FMLA benefits to employers who employ 25 or more employees instead of the usual 50. These extended FMLA benefits are only available to employees who have child care needs due to COVID-19. If the employee can demonstrate that the school or daycare is closed beyond the 2 weeks or 80 hours of paid leave provided under the FFCRA, then they may request up to an additional 10 weeks of leave at 2/3 of their regular rate of pay. The good news for employers about the FFCRA leave is that since it was instituted as an incentive for employers to maintain employees on their payroll, employees will be paid back for the cost of this leave via a payroll tax credit. Self-employed individuals are also eligible to take advantage of the leave benefits offered under the FFCRA if they otherwise qualify for the leave. In the case of a self-employed individual, they will be entitled to income tax credits to offset their federal self-employment tax. Additional information is available on the IRS website, irs.gov, on how to calculate the value of a self-employed individual's tax credit should they qualify for this type of leave. As this presentation was intended just as a brief overview of some of the benefits available for COVID-19 relief, I did not have an opportunity to list all of the benefits provided for in these statutes, including some of the small business loan programs. If anyone has any questions or if there is a particular topic that you would like additional information on, please give me a call. My contact information is listed in the slide. Thank you.